All right. Good evening, everybody. Thanks for joining me tonight for Liquid Sundays. The date is Sunday, April 19th, 2026. This is Liquid Sundays SPX top down analysis. Look at some key levels heading into the week, some geopolitical headlines, obviously resurfacing. Not surprising. But I'll just read some of these notes real quick here, and then we'll take a look at some charts. So, um, my plan is to go through just a quick top down here. We can look at some of the price action from last week, like we usually do. See what we should have done, what we could have done, and what we shouldn't have done. Anyway, all right, let's start the SPX top down rundown. Current levels closed April 17th at 71.26, up 1.2%, fresh all time highs after strong weekly rebound and V shaped recovery. There's your V right there. Um, technical, technically, we're bullish, trading above key moving averages, broke 7,000 resistance. Near term upside target 7,200 to 7,300, support at 7,000 to 6,900. RSI is neutral, not overbought. Technical macro earnings Q1 earnings growth tracking strong. Early beats about 85% was solid year-over-year gains. We got a heavy week. We got Tesla Wednesday, Intel, United Healthcare, ServiceNow, Vertiv, and about 94 S&P names total. Key events. Let's see here. So we got Tuesday retail sales. Expected 1.5% month over month. Thursday, initial jobless claims. Um, Expectation 210. Flash PMIs, manufacturing services. Focus, consumer data confirmation, earnings momentum. Outlook, constructive bias. Earnings strength and resilient data support all time high consolidation or mild upside grind. Risks, earnings miss or softer data. Base case 7,000 to 7,300 range with positive tilt. So, obviously, let me get rid of this here. Obviously, we got some news over the weekend. Strait of Hormuz is closed again. not not really surprised at um, the back and forth, but we'll see how that whole situation develops. We'll just focus on the chart per usual, and we don't really want to try to front run the news and try to trade what we think what's going to happen in the news. We want to trade and focus on the reaction to the news. So far, obviously, knee jerk reaction. You can see S&P futures, US 500. We got this gap down here to 770.50 about, but we see this almost every weekend now. A gap up, a gap down, and usually gets filled. So we'll see if that's the case this week. But let's take a look at the regular cash session here. I did bring up this indicator, Chromosphere. Thanks for sharing it. I'm happy and I'm kind of sad. I'm happy because somebody did it. I'm sad because I was trying to do it for a while, and I got a little discouraged with TradingView because I kept coming up with some pretty solid scripts and things that I was really positive and constructive on, and I don't know, the moderator, some of the moderators on TradingView are a pain in the ass. So I kind of put indicator stuff on pause and just wanted to focus on um, price action trading and how to trade versus creating any more indicators. But basically, um, this is the you know real time um, intraday kind of gex levels mapped out right on the chart for you. I actually brought this up with Andrew from Quant Data. I said he was asking if there was any feedback, and I said I've been trying to kind of come up with a way to just put, gamma levels right on the chart so I don't really even have to look at them in a separate screen here. And I haven't done any back testing on this yet, so I don't know how this is going to work out. But I'll do some back testing for the next 30 days, and I'll let you know if it's something worth using or monitoring. It's free on TradingView. It's just free gamma levels. This is it right here. Here, I'll show you. Free, my free gamma levels, the real drip to dip. I don't really know this individual, but they got their own thing going here. But I'll give them a shout out because it looks kind of cool. I have not, like I said, haven't back tested it yet, haven't looked at it yet. Chromosphere brought it up in the chat, and I looked at it, and real quick, it looks kind of cool. So I'll take a look at it. But anyway, um, so I'm gonna take that off the chart right now because I'm just gonna give you my analysis, just give you an idea of something that I'm kind of back testing this week coming up. All right, so here's our weekly chart. Again, let me emphasize this. Gamma is great, volume, all this stuff, indicators, blah blah blah. But my main focus is always going to be reading price action. I'm always going to look for swing highs, swing lows, fib levels and price action reacting off of those levels. That's my main focus. If you took all of my other tools away and gave me some candlesticks on a chart, that's all that I need to trade. And that's all that you need to trade. The other stuff helps. It does, for conviction and stuff like that. But also too much stuff is a lot of noise. So my main focus is always going to be price action first, candlesticks, market structure. Okay. Many of you that have been here for a long time and know me know that that's what I focus on. So um, that's what I'm going to show you right now. So basically, here's our weekly candle on the SPX cash session. Take my fib tool here. I'll show you how I do this every week. I take the swing high, which if you look here says 71.47. So I'm going to take 71.47 and I'm going to snap it down to the low here. The low is 7,900. Okay. So basically going to come right down to 79. I'm sorry, 7,900. The low here is 67.90. I'm going to come down to 67.90, somewhere in that range there. It's fine. Couple percentage points off, fractional. So here is what I'm looking at heading into this week here. Are we above 50% of the previous week's candle? 69.69 is going to be that kind of line in the sand for major support if we do trade lower. Currently, futures, gap down, and we're still above this 786 level here. So I wouldn't get too excited about further downside until we start losing some of these fibs here, the 786, and then obviously the 618. Um, a lot of times these moves, swing high to swing low, will come back, retrace the 618, and then continue on. So we'll take a look at that. Obviously, I'm starting, weekly time frame. Okay, we got our weekly level. 69.69 is kind of our support, and then 71.48 is our resistance. Then I look down into the, I'm sorry, let me just back up a sec. Should we break back out above, 71.48 this week? There are targets up here. 73.70 is the extension from this breakout here. This move is what is it, like 800-point move in 3 weeks. So some cooling off, some consolidating, whether it be mean reversion with some price or kind of flat, would make a lot of sense here. We've got a weekly fair value gap here now, but we're going to basically look to 69.69 and then previous all-time high. So retest the previous all-time high. Should we bounce back up and break out above 71.48, we can start looking up to 7,200, 7,300 right there. On the downside, should we lose support at 67.90 to the downside? We have the extension, which is a 65.69, and you can see there's no swing low. These are huge weekly ranges here. So, 50%, possibly 50% retrace of this fair value gap here. Should we lose support is around 6,700. All right. So this is the weekly. Um, get rid of some of these here. Look at the daily here. All right. The daily, getting a little bit closer look. We do have gaps. We got a gap here. We got a little gap here. Obviously, got the big gap here. But heading into tomorrow, heading into the overnight, I'm going to do the same thing to kind of formulate a plan heading into this week, into tomorrow. I'm going to take the previous day's candle. I'm going to snap the high and the low, and I'm going to look, okay, are we above or below the previous day's support? Well, right now, currently, we're right below it, right? 71.71. So is 70.74 going to act as, this was support from last week. It's basically, we're trading below it right now in the futures market. So is this going to become resistance? If it does, we're going to look basically down to our our previous day's high, and we have our gap here, and this gap here is, let me see, close 70.41. This candle closed at 70.41. So to fill this gap here, technically this could fill all the way down to 70.41. um I don't want to get ahead of myself, but let's see where we open up, obviously, into tomorrow's session. You can see, though, if we bring up again to the downside here, high to low here, extension down. If we fill that gap, extension's around 70.29. And from a moving averages perspective, we're going to take whatever. You can take whatever EMAs you want here. You can see we're extended off of our moving averages, whether you use Ripster's clouds, Saudi's ribbon. Um, you can see that we need to come back down and test the 8, the 9, potentially the 21. But you can also see here that the crossover of the bullish over the bearish moving averages, creates a positive trend now. So we had a negative trend here where we were technically selling at resistance, and now reclaimed the trend line, reclaimed moving averages, and you can start to just potentially draw another trend line to the upside. Bounce down here off of this thing, and we'll see what happens. So there's the daily. We can look at the hourly chart here. You can see here on the hourly. Let me get rid of some of these things here. You can see here on the hourly, we have a nice hourly trend still. And on the downside, should we lose should we lose these EMAs here, we'll come down and see if this acts as support here. This is that 7,000 level here. And hourly trend is important for, day trading specifically. Kind of keep you on the right side, on the right bias, right? So that's the hourly trend, which brings us down into our 15-minute trend. And this is where we can start looking at maybe last week's price action. I'll bring up last week's plan, and we can paste it on the chart here and see um, what played out versus what was written. So I'm going to remove the clouds here for a moment. And so this is the SPX cash session. So there's no overnight data on here. But let me bring up the SPX day trade plan from from Friday. And we'll paste it on the chart here. Okay. Copy, paste. Okay. So, you know what? Let me bring up US 500 because that's what I make my plans on, and it's just a little bit easier to see. All right. So this is you can see here. This is the gap down. So we're trading right around here right now. So we'll see if we fill that gap. But for the purposes of showing you Friday, I'm going to bring up the ICT Kill Zone Toolkit. This is the shows you the overnight sessions, the Asian, the London, and the New York. So okay. So here's the plan. All right. So heading into the bell, um, we were. Let's look at a 5 minute chart here. A little easier to see. Heading into the bell, we were right here at, I'll tell you what the exact open was. So 71.04. So I came out with this plan. You can see when the price was here. Okay. That's why you see here on the plan. When I make my plan, I want you to tell you what context I'm looking at it from because, sometimes the plan will break out after I write the plan or, price is far away. So I want you to know when I come out with the plan, where we're at. So 7104. So right here is where I came up with the plan. And this plan was devised, let's see, pivot, resistance 7111.6 here. So I take this high here. This was the high in the previous. It's not always going to be overnight high, but generally I look for like where are the equal lows, where has where has previous resistance possibly turned into support, and that's a lot of times where I'll get my ideas for my plan. Like if you just took the overnight high and the overnight low, sometimes it's a huge range, and you can definitely trade against it. But I want to know where like the highest levels of liquidity are, and if you look here, so if you look here, this was Thursday's high, so this was resistance, and there was some equal highs here, and then London came up, and then basically this level here was was resistance, and here it became support here in this push up before the bell. So in my mind's eye, I said to myself, okay, well now this is support. So I'm going to take resistance, which is here at 711.6, and now I want this to be my support level here. You see that? So look, so I basically, if I just took overnight, high to low, you're kind of not getting the correct picture in my mind's eye. So, here's key support. Here's our pivot, right? You see here 7081.7. There's our pivot. And our resistance is going to be that pre-market high right before the bell. 71.1.6.5, whatever you want. And then 50% of that range here, that's their pivot, and then I just basically come up with my plan. Okay. Bias above our pivot, long setup, main play, entry, pull back to 70.82, 70.85 plus bounce. What happened at the bell here? We got a bull, we got a pullback, and we got a bullish, hammer right off of that level here. So easier said than done. But if you're looking at risk versus reward here, you can long the pivot, okay, and you put your stop, under 70.48. I'm sorry, you put your stop under um this is 70.48. This is too big of a this this range here, this stop a 30 point um range here, this is not, especially SPX. this is not intended for everyone or futures, right? Most people can't with a smaller account. If you're trading out of a smaller account, you cannot stomach a drawdown of 30 points. Okay, so what I want you to understand is if you're taking a long off the open, first of all, you don't ever have to trade the open. Okay, that's the first thing I want to say. You don't ever have to trade the open, and it's where you're most likely going to get faked out most of the time. You can though, and if you do that, I just want you to be aware. Like if you're gonna long the pivot here, you know, if you're gonna risk anything, you're probably gonna risk, let's just say 7 points here. So you're gonna target, at least 14 points. So you always want at least one. You're risking one to make two. So if I'm risking 7 points, I want my target to be at 14 points. That's where I want my first target to be. You want to keep this ratio in check, because if it's not, your over time it's going to catch up with you. Okay, you want to stay mechanical about this. If you keep aiming for one to ones and you get stopped out over and over, it's gonna be death by a thousand paper cuts. All right, so get in the habit of when you're whatever you're entering, whether it's SPY or yes or whatever it is, you're risk, you're going in at 70, 81. Okay, I'm going to target plus 14 points if my stop is 7 points. That way you're going to always put yourself in the correct situation. So getting back to the plan specifically though, pull back to 70, 80, 82, 85 bounce, or break and close above 71 1.6. So here's the other part of the plan. And this is the other thing that I'm trying to emphasize. You don't have to take the opening 30 minutes, right? If you waited this whole move here, don't have FOMO that you missed out from here to here. All right. Recognize that it's 10 a.m. We have a breakout. Okay. Our breakout is 71, above 71, 11.6. So you can see price breaks out above. Okay. And something that I always look for is this silver bullet here. This is our, first 5 minute fair value gap after 10 a.m. And you can see here, price breaks above our bullish breakout and comes back and tests it. So now this is our long here, and our target obviously is going to be the extension. And there's nothing to the left here, right? We're like in discovery mode because there's no prior resistance here. So this thing just basically takes off and goes to 71.48. But these were the two bullish scenarios, and you can see they worked out pretty well. So if you longed the pivot, um, target one. Basically, the way that I want you to approach each day and each plan is I'm going to take the pivot into resistance. Okay. I want, I'm bullish above the pivot. If I have bullish price action above the pivot, I want to take that into resistance. So trade one, let's say you took the open. This is the 9:30 to 10 a.m., kind of textbook perfect trade, worked out well. You could have used maybe like a 5 minute opening candle to confirm. But this was the thesis for the opening trade. And I did mention, I think in real time to some of the folks in the chat that, you know, I'm thinking in my head when I'm in this trade that it's 10 a.m. I want to get out of my long here, or at least drag a stop up if I'm in futures. Futures is easier because you can just drag a stop out. You can stop that, no problem. But I'm thinking before 10 a.m. I want, there's different parts of the day that are basically, I want to take profit at 10 a.m. I want to take profit because you can get some data, a speaker, something comes in, and you all of a sudden the data flips, and then it reverses back down, and now you're giving all this back. So basically, um, 9:30 to 10 a.m. Beautiful trade. 70, 81 to 711 point 5, point 6. Lovely trade. And then you got this. If you didn't do anything here, you take 71 11 and plus 10, plus 20 points, whatever, make your stop, 5, 10 points below our breakout there. and that's how you trade it. I mean, are you going to catch, the bottom and trade it to the to do you think you're going to catch the very swing low every single day and ride it to the swing high? No, you're always we need to only catch a piece of this move. And we just need to repeat that, and we need to keep our risk management um in check every single day, and the rest will take care of itself. So, and then again, my favorite time of the day to trade is, the open into 10 a.m., 11 a.m., 12 a.m. Can we take trades counter to the downside? We can. Or if we're trading down, can we, look for the reversals? We can. That style of trading is counter trend, and it's more difficult. I did point out, and I'll show you here, how you can trade that. And I've basically traded momentum, reversals. I've studied a lot of different theories, and when you learn how to read reversals and counter trend, it's very cool because you're getting on the correct side of things. When you don't really do it, efficiently, it really comes back to bite you in the ass. So, but here's a quick rundown of how you could have traded the reversal, and I did bring this up. So once you start once you start getting extended, let's just say, and this is MACD and this is RSI here, and these are pretty much two of the most commonly used indicators out there by the masses, if you will. So you've got your oscillator, and you've got your price. Okay. So basically, price is trending up, right? So this price is trending up here. And then if you look here, um, you know, the oscillator is trending down here. Okay. So this is what we call bearish divergence, if you don't know. And you can see RSI as well, right? RSI got up to 90 here, and now RSI is kind of trending down here. So when you have price making new highs and your oscillator turning down, so this is kind of the first chink in the armor. This is a 5 minute, but you can just 5 minute, 10 minute intraday. You can see the blue line here. Once the blue line crosses over the orange line here, um, and momentum starts to kind of fade here, and same thing with RSI. You start kind of making new highs. You're kind of bumping your head up in here, and then we hit resistance here. And at this point, you're telling yourself, okay, I'm at resistance, and MACD is trending down, and now I get some price action to confirm, a potential reversal here. And these reversals here are, in strong trend, are reversals that we're going to trade into prior support, or prior, significant price action like the fair value gap or the EMAs if you're extended on them, right? But the best counter trend of the day was right here. And if you look, let me get rid of this here for a second. If you look here, this was 1 a.m. here. So you get basically a reversal here. And if we take our little our rectangle tool here, we do leave behind this fair value gap. So if you were looking at the oscillator here, MACD and RSI, we're trending down, price is making new highs, fair value gap to the downside, boom, there's your entry to play this to the downside, and your risk is obviously going to be above, high of day or above this fair value gap, the first candle here, 71.45. So let's just say you got in this at 71.30. Let's say you got in this at 71.30. You're gonna, or 71, I'm sorry, 71.30. This closed at 71.36. This candle. I like candle closes. So if you waited till 13:10, and you got a 5 minute candle close here, you are entering this trade at 71.36. So let's say you're targeting 10 points. You're gonna, you can just basically look here at previous swing lows or support, and this is where you're taking profit here, and your support is above here. So, I mean, whatever you do, if you decide to try to trade this, don't try to trade this to hoping for um, a complete waterfall back to the opening print, right? You're only looking to trade counter trend back to kind of the mean or back to the um, key price action or previous levels here. So, and then the rest of the day here is is very choppy and not ideal to trade here, in my opinion. Okay, and this is why I like to emphasize, I want to trade this, I want to trade this, I want to trade this. I don't really want to trade this. I don't really love this, sideways stuff here. It works for some people, but it's not it's not really my cup of tea. So yeah, that was Friday's action there. Um, Everything kind of makes sense for anyone that took the trades that's in here. I know there was a couple questions and a couple I got some feedback. Pat, I wanted to address what you said live. Pat was like, I left a lot of money on the table. Um, I could have had a bigger day, but the big thing with that, Pat, is going to be it's always going to be you have to scale. So, especially you who has a large account and trades multiple contracts, you want to take, if you're entering, let's say at the pivot and you're taking long, you want to scale, 50% of those contracts out here, okay? And you want to leave, runners and then scale another, let's say 25% or 30, 40%, whatever it is, and then you want to leave like 10 or 5% of your position to actually make the full move, because you know that these contracts, it doesn't take a whole lot to make money when you're trading SPX. So when you realize the full potential of a move like this, um, with runners is when you catch the full move. But to think that you're going to take 25 or 30 contracts or something like that from here to here is over time it's going to come back to bite you in the ass, right? Because if it reverses or whatever, and it's emotionally draining. So that's the way you got to get used to like scaling at levels and holding runners. Let's see here. Web surfer. That looks insanely algorithmic. Because it is, right? It is insanely algorithmic. That's what we see every day, every week. Let's see here. Do I have some more questions? I got some questions here, maybe in the nope. Okay, cool. So anyway, that was Friday's price action. Really, really nice, kind of straightforward. Thursday was pretty nice too. We can bring up Thursday's price action and look at that as well. But when I'm looking at each day, um, I'm looking at, are we trading? A lot of times I'm looking at, are we trading above or below kind of the previous sessions here? And once we kind of pull back in, like see how this kind of like basically was kind of consolidating, and then we had like a lot of like tight range here, and then this big opening kind of swing here was really nice for a nice pullback. And the tighter the range. So let me say this. This was 50% of our range here, and this was really high conviction because we had a nice long wick off of our opening print. So our opening 15-minute candle, we pull back to our pivot, and it's like lovely, like really nice, kind of straightforward strength off of our pivot, and then obviously breakout of our resistance here. This is if you're looking at this from the simplest form possible, um, this thing pulls back to our pivot and then breaks out here on a 15-minute time frame. Look how nice this is. This is basically, uh, you know, support, resistance, right? Breaks out, goes to our extension, and then pulls right back into our support. So previous resistance from the pre-market, right? After the pullback, like let's say you caught the divergence here, comes back and basically parks it at our previous resistance here. And then, bounces a little bit, whatever. So you don't really want to chase these moves down. We had strong momentum to the upside and then some pullback to a previous resistance, which became support. You always want to look on whatever time frame you're looking at. Where is support and resistance, and is resistance becoming support, or is support becoming resistance? This gives you a nice line in the sand to trade off of, right? You don't. I always like to say, like, you don't need a whole lot of indicators. You literally need like a candlestick and a line tool. And once you kind of learn the way the market moves, you can just trade off of that as long as your risk versus reward is proper. So hopefully that's helpful for you in identifying price action, intraday. Let's look at Chromosphere. 70p was amazing on that divergence. The same time, yeah. Oh, 709p. Yeah, I'm sure it was. Puts are great because you know you're basically when the when the market rolls over and the VIX spikes, the premium gets juiced on those put contracts. So that's why they're so like they get the blood flowing. But playing counter trend more difficult. All right, so let me grab the plan from, let's see here, 416 416 SPX day trade plan. Here it is. Okay. These are all archived in my Alpha Alerts channel. For any of the subs that ever want to go back and kind of backtest some of this material on your own, everything is all. I have never erased anything. Um, I'm trying to clean some things up. So going forward in Alpha Alerts, I'll keep like all the relevant macro, the news stuff in the Alpha Alerts, and all the plans will just go in their individual thread. So like I have been. I've basically been doing like I'm trying to just get back into doing a clean SPX chart. I'm sorry, a clean SPX plan in its own thread, a clean SPY plan in its own thread, and a clean ES plan in its own thread. And then if I'm going to trade one of them specifically, I'll let you know, and then like I'll post the relevant price action. But if it's just overall price action, I'll just put the price action in the Alpha Alerts. But if you ever have to refer back to the plan, there'll be a clean thread with all of it in there. And you can just go back and look at it anytime you want. All right, so here is SPX. Excuse me. Here's the SPX plan from Thursday. And let's see how I came up with that one. All right, so let me see. How can I fit this on here nicely? That'll work, I think, right? All right, here's Thursday. Okay. So here was the New York Open on Thursday. Here's the plan. So again, heading into the bell here, you can see price was closed at 70.34. So uh, SPX current 70.33. How did I get this plan here? Well, this one was pretty straightforward. Again, I got my fib tool here and resistance 70.40. So that 70.40 level was, you can see here, there's the Asian session and the London session. There was a lot of nice equal highs. I love the 15-minute time frame to frame my plans on. It just works great for coming up with a plan in my experience. So here's 70.40 Asian London high, and then support is at 720. And basically, again, this was the low right here from, if you look here, 6:45 in the morning. And I was basically looking at that as, okay, this was resistance from the New York session here is now looking like support into the London session here. And that's where I came up with the plan. That's how I came up with the plan. So 50% of that plan, 70/30. This was not, as straightforward, but if you're just trading, like a robot, we'll go down to this 5-minute time frame. Below 70/30, I'm going to trade that into 70/20, into support at 70/20. If I'm looking for the downside target there, I'm just going to reverse this fib here. So I'm going to take it this way. Look at this, 70/40, right? Was our okay, and there you go, boom. I mean, I've tested this so many times, and the reason why I'm so confident on these plans is because it happens over and over and over again. It's ridiculous, Loss of support here. Where did price go? It went right to 7,009, and and then it bounced, and then you get a bullish order block recovery of support, and then long into pivot, and then long above the pivot into resistance, and then above resistance, where did it go? The 1618 level. You can't make this up. I mean, you can't. There's no. There's no in. But by the way, there's no indicator that comes up with this. This is just me looking at the market and saying, okay, these are the most important levels, and this is where I want to go long and I want to go short here. This is what I discovered. My superpower is, okay, being able to see where price is most significant and being able to read the action to figure out where to formulate the plan around. And that's it. And you don't need anything. You don't really need anything else. You just got to understand what's important for support, resistance, pivot. So there's that setup here. And again, look at the risk versus reward anytime you're entering a trade, right? So long setup preferred, dip buy to 70/30 or bounce off of 70/20, stop at 70/18, target 1 70/40, target 2 70/55. We didn't quite get to 70/55 because you can see the 1618 was that 70/52 level here, roundabout. But that was Thursday's price action. So, um, yeah. Any questions? Oh, Posty Green. Hi, Morpheus. Great content here. Thank you so much. Any day you're going to do a live session during normal trading hours so a potential new subscriber can view the kind of content that you put out during a live session? Um, no, I mean, I do live sessions, usually once or twice a week. Um, but as far as what I put out during the day, my alpha alerts channel is where the bulk of all of the kind of education and all of the um, you know, um, kind of good stuff is. Here, I'll show you. I'll tell you what. I'll show you what that looks like. Let me go back in here. Where is the? Oh, here we go. Change stream. Share screen. Okay, so you guys can see this is all your lovely faces here. Um, so like, during the course of the day here, um, I'm gonna basically show like, hey, like go long at this level here, go short at this level here, take profit here, um, you know, 949 here, basically breakout, showing, up into key resistance here. I'm basically trying to emphasize, how to decipher things from the plan. But when I go live, I do like a screen share of charts and all that stuff, and significant price action. So I do that already. Basically showing, stuff like this. Like here's your 50% level from the plan here. You see the wick here. You got a fair value gap here. And I'm basically, shorting this here into support. That was from Thursday. And this is, 1251 here. You got your pivot here up into resistance here. This is on SPY. This was a nice little rundown. I had Grok right for me. Um, Alan, I'll post it in the chat when I'm done here because I'm going to upload this video into YouTube. So all right, let's go here again. Change stream here. All right. All right. So hopefully hopefully it's starting to make a little bit more sense the more you see it as far as trading, the price action versus the plan and whatnot. Here's our overnight gap here. We've got what do we got here? 70. We closed at 70.26. We're at 70.61. We got a low of 70.48 here. This is basically our support from Friday's plan, right? See, this was the breakout here. It's easier to see on a 15-minute. But here is the support level from the plan on Friday. That's basically where we're trading right now. Boom. So we gapped down, we bounced off of that, and more likely than not, this thing gets uh gets filled unless we start ending civilizations in the near future, which wouldn't be good. Pray for that not happening. All right. Anyway, that's about it for tonight, folks. It's almost 8 o'clock. I'm gonna eat some dinner, spend some time with the girlfriend and the dogs, and yeah, I'll see y'all in the morning. And I'll see you in chat. Thanks for hanging out.